Let me quickly review the self-credit builder account. Is it better than a secured card or a cosign loan? Welcome back, folks, to another edition of the Awesome Sort of Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today, I want to review the Self-Credit Builder account. And this is an account that has been doing fantastically, and we just wanted to take the time to really go in depth and see the pros and cons of this account. So, have you been unable to get a credit card or loan because of bad credit or no credit? Credit builder loans are a great way to get around that problem. So basically what happens is that you make a deposit into a savings account that acts as security for a credit card for the same amount. You use it just like a regular credit card. And when you have a credit balance, you make monthly payments. And those payments are actually reported to the credit bureaus, right? Experian, Equifax, and TransUnion, and helping you. And this helps you to either build or improve your credit score. So, but what if you don't have the money to deposit into a savings account to create a credit builder in the first place? My friends, that's where formerly self-lender, comes into the picture. They are a different kind of a credit builder program. So instead of making a security deposit, they set up a loan program in which the payments go into a CD, a certificate of deposit. So not only do you build or improve your credit rating, but you also have a fully funded certificate of deposit at the end of the program. So let me kind of give you an overview of Self. Self actually helps customers build or improve on their credit score. So if you have bad credit, little credit, or no credit, Self could be a good company to look at. The company was actually founded in 2014 and is currently based in Austin, Texas. And the company is partnering with Sunrise Bank, NA, a Minnesota-based bank founded in 1962. And they also have another partner, Lead Bank, a Missouri-based bank reorganized in 2010, but they have been in business for more than 80 years. So they have solid partners. And Self works in a very different way from other credit builder type programs in that it doesn't require you to put up any type of security deposit. In a real way, this is kind of cool because it works by setting up a loan which you effectively pay to yourself. That's the great distinction here. You pay the loan to yourself. And after making the payments, the money's all yours. So the company is offering its programs to consumers in all 50 states. So we have nationwide coverage here. The service is available for individuals looking to build their credits and not for those looking to build business credit. So this is personal credit, not business credit. Okay, and we've done some research and we saw that Self is rated, as of the date of this show, A, on a scale of A+ to F by the Better Business Bureau, the Triple B, and they have been accredited since January 2016. Now, I want to dig a little deeper here and lay the foundation of how Self works. So, unlike typical credit builder loans, where you have to make a security deposit, usually into a savings account, Self sets you up to fund a CD. And the certificate of deposit has a term of either 12 months or 24 months. You can choose the amount of money for the CD from among 4 different accounts. So they have 4 different amounts, really, not accounts, amounts. So the CD is held in your name at either Sunrise Bank, NA, or Lead Bank, and is fully insured by the FDIC. So once the CD has been opened, the certificate is locked, okay, and it's not available for withdrawal until the loan is fully repaid. So this is something you have to think about. So we're showing you Sunrise Bank, a great partner in the Self business model, and then we have Lead Bank, also that's a great partner in the Self business model. So what happens here is that once you set up the CD and the money is in the CD, you will make monthly payments, which will gradually build toward final CD balance. And at the end of the loan or CD term, the certificate of deposit is available for withdrawal. And what will happen here is that in the meantime, all 3 major credit bureaus receive reports on your payment history. Think about it. So basically, self is a middleman, if you will. And the middleman actually that is reporting your good behavior, your good payment behavior to the credit bureaus. And the cool thing here is that self is not giving you any money. It is your own money. It is your own cash. Okay. And so how it works, we're showing you right now on the screen an example from self website, how it really works. So you can see that here, we're taking some time. Let's just leave this on the screen for a few seconds. All right, so really the whole idea here is that you are building credit while saving money, starting at about $20, $25 per month. Okay, so you apply for a credit builder account. Your money is safe and secure, no hard pull on your credit, very important, so your credit score is not going down. You pay off your credit builder account in the specific amount of time, so you can actually choose the payment term and dollar amount that best fits your budget. So each on-time monthly payment builds credit history and adds to your savings. So your monthly payments are reported to all three credit bureaus, Equifax, Experian, and TransUnion. And once you do that, the fourth step here is that you unlock your savings. So once you have paid off your credit builder account, your CD unlocks and the money is yours, of course, minus fees and interest that self takes. And that makes sense. They need to make money too, right? And one thing we love in terms of features, in terms of how self works, they have a great tool called the self dashboard. And this is cool because with this, you're able to you can manage the entire process from the self dashboard. There you can make monthly payments, you can track your credit history, and even monitor your savings progress. This is the approximate value of your account if you were to close it on any given day. And the savings progress formula works as follows. So you have a CD principal, so there's no interest, minus the remaining loan principal, minus the loan interest accrued to date, minus outstanding fees if applicable, minus a CD early withdrawal fee if terminated early. Of course, the formula is purely theoretical because you're not able to withdraw the funds from the CD early, right? This is not really something that you can do. So let's talk about CD withdrawal here. You will earn interest on the CD throughout the term, and the entire certificate balance will be released to you upon completion of the loan payments and the maturity of the CD. And once the certificate of deposit matures, you can choose to have the funds paid out. And just expect that you will typically receive the funds within 10 to 14 business days after your request. Now, we had actually reached out to Self and asked them why that the time frame was so long, and they told us that they are actually working on actually reducing that time frame. So from 10 to 14 days, they're thinking about bringing it to 7 to 10 days. All right. And there is one major negative with the program, with the Self program. You cannot temporarily suspend your account. Since it is a credit builder account, if you are unable to make a payment, it will be reported late to the credit bureaus. Think about that. That's your own money. Okay, so late payments are reported if they are more than 30 days past due. So simply because it is your own money doesn't mean that if you just suspend the account, everything will be fine. No, everything will not be fine. Okay, and one thing I also want to say is that the Self Credit Builder program enables you to accomplish two important goals. You can build or improve your credit rating with all three credit bureaus, and you can build savings in the city. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation today about the Self Credit Builder account, and we are reviewing the account, and we just wanted to know whether the service is better than a secured card or CoSigned loan. What are the features and benefits of Self? Let's just go into that. First, you have the income requirements. Self does not have an income requirement to open an account. It doesn't matter if you have an income or you have a job or whatever. It doesn't matter. They're looking at the cash. They are following the cash. They're not following your revenue or anything else. So the important criterion here is the cash, not the income. What about credit eligibility? You will not be denied a credit builder account if you have either poor credit or no credit. Eligibility for a self credit builder account is actually determined through the check systems database of past retail banking history. So they pay a lot of attention to the check systems database. And so self's bank partners use check systems to determine your eligibility. And the system functions as something of a credit report monitoring of your history of banking relationship. As I said earlier, they pay attention to the cash and your banking relationship, not your credit history. What about credit score? So in general, Self reports that it will take at least 6 months of on-time payments to establish a FICO score. They also caution that if you already have a credit score, it may drop slightly upon taking the credit builder loan because it will represent a new and unproven obligation. Self reports customers with an 1,100 credit builder account in good standing have experienced on average a credit score boost of 45 points within the first 6 months. Okay, 45 points within the first 6 months. And the company also reports subprime customers experience a credit score increase of 20 to 25 points over the life of the loan. So your credit score will be available on the Self dashboard so you can see that you can monitor it. And you can, and when it comes to making monthly payments, all you have to do, you have to link your bank account to your Self account, and you can either make one-time payments each month or set up automatic payments. And in terms of account beneficiary, when you open a credit builder account with Self, you can actually designate someone a beneficiary for any funds paid into your account. What about early repayments? The thing here is that you are free to pay back your credit builder account at any time. There are no extra fees or penalties for doing so. But once you do, you will receive the proceeds of the CD plus accrued interest. However, the bank holding the CD will charge an early withdrawal penalty. So Self actually recommends against early repayment, since the primary purpose, if you really think about it, the primary purpose of the credit builder program is to build or improve your credit score. So it doesn't really work in your favor to close the account early. So that should happen only when the full payment term is complete. And Self also have something called, they have a Self blog, right? So the site offers a blog that deals with credit and personal finance topics like budgeting, credit cards, debt, financial health, student loans, auto loans, mortgages, and more. And they also have a Self referral program. So if you refer a friend, you will earn $10 when they complete their first successful credit builder account payment. So when you actually analyze Self and you kind of look at the company within the ecosystem of credit builder accounts, what really makes this company unique? What is their competitive edge? What makes them attractive? It really depends. Now, Self works better than a secured card, CoSigned loan, or prepaid card based on our analysis, hands down. So some people who have either bad credit or no credit rely on other types of cards to build credit. One is a secured credit card. This type of arrangement will do the same thing Self will do, reporting monthly payments to all three credit bureaus. In the meantime, you could use the secured card the same way you would a regular credit card. The disadvantage with a secured card is that you have to fund a savings account as security. If you don't have the cash, you will not be able to get the card, and you will not have access to those funds until either your credit line is paid or the bank releases the security lien on your account. The one advantage of a secured card is that a secured card has over a Self account is that the card can be used as a credit card, but you will also pay interest on that card, and that can be higher than the APR charged on the various Self plans. Still, another way to build a credit is getting a loan with a cosigner, right? And this will result in a lower interest rate and better terms. But if you don't have a cosigner with excellent credit willing to cosign for you, this obviously wouldn't work, right? Because not everybody has in their family or in their entourage someone with stellar credit. Okay, and the one thing we've seen also is that if you make any late payments or default on the loan, it will affect your cosigner's credit, and he or she will then be responsible for paying the remaining balance of the loan, and that could ruin an otherwise great friendship or even a family relationship. And finally, some people with no credit or bad credit try to get by with prepaid cards. While this can function like credit cards, they don't help to build your credit history, because the whole idea, if you have no credit history or little credit history or bad credit history, the whole idea is to build or rebuild your credit history. So if you have a card like a prepaid card that doesn't help you in that direction, it's really not worth it, right? And also, much like secured cards, you cannot spend any more than the amount you add to the card. I want to talk to you now about self-pricing. What is the pricing model of self? The application fee, there is no application fee. Activation fee between $9 and $15 depending on the loan CD amounts you take. The interest rate APR ranges from 12% to 15% or 16%. Late payments, you have a 15-day grace period on monthly payments. So after that grace period, the late fee is equal to 5% of the scheduled monthly payments. So the late fee schedules is as follows. We're going to put this on the screen so you have a clear idea of how these things work. So we have 1.25 late fee for the 525 credit builder account. You have $2.40 late fee for the 545 credit builder account, $445 late fee for the 1000 credit builder account, and $750 late fee for the 1700 credit builder account. So you kind of have different tiers of late fees depending on the credit builder account you have. And how do you open a self account? The application process takes less than 5 minutes. I mean, self is part of this I would say this constellation of new fintech companies that actually have a lot of, they're very great in terms of using technology to further their business model. So everything is happening on the internet. Everything is fine with self. It takes less than 5 minutes. It's really fast, very streamlined, great customer experience. So to open an account with self, you'll need the following: a bank account or a debit card or a prepaid card, email address, phone number, a social security number. You need to be a valid permanent U.S. resident with a U.S. physical address. You need to be at least 18 years of age. They actually also recommend beginning the process with a linked bank account for electronic monthly payment purposes. And if you use a debit card, there will be a convenience fee of 30 cents plus 2.99% of the amount of the payment. So you just have to think about that. Based on our research, it's better to have a bank account with self, because then they will be able to check not only your checks systems history, but they'll also be able to link the whole payment process right away, and you would also avoid the 2.99% convenience fee or the 30-cent convenience fee that you would actually pay if you were to use a debit card. I want to talk to you now about the pros and cons of self. I mean, not everything is rosy. Of course, this is a relatively new company. They are constantly improving things. They're constantly working hard to expand their reach to better serve customers. So the pros and cons based on our research. The pros: with self, you can build or improve your credit rating. You can build savings in a CD. You can choose from 4 loan CD amounts. So you have a variety of choices here. What about the cons? The money is not available for withdrawal until the loan is paid in full. You cannot temporarily suspend your account, and you may be subject to early withdrawal penalties if you were to take your account out, or if you wanted to take your money out. All right, folks, this is it for today's conversation. Thank you so much for your attention. I was talking to you today about, I was giving you a self credit builder account review, and I was just wondering whether the card was better than a secured card or a CoSigned loan. And I think I've answered that question. So I spoke about self at a glance, how self works, features and benefits of a self, what makes self unique, self pricing, how to open a self account, and self pros and cons. Thank you so much for your attention. Really appreciate it. I'll see you next time. But until then, remember, stay marvelous.